Thanks very much, Carl. Fed Governor Lael Brainard will say the Fed will begin to reduce the balance sheet at a rapid pace as soon as the May meeting, sort of echoing, maybe going a little further than Fed Chair Jay Powell has gone in the past. She says the committee will continue tightening policy, quote, methodically, and that is through a series of interest rate hikes, she suggests. Of paramount importance, she says, is to get inflation down. On the balance sheet, she says you expect to shrink the balance sheet more rapidly than the Fed did in a previous balance sheet reduction period. And that includes large monthly caps on the runoff. That is, the Fed will set a level for how much it will allow to run off. She's saying those levels will be large. They'll phase them in, but they'll get to them very quickly. All of this combined, the rate hikes and the balance sheet runoff, will make policy, quote, more neutral, she says, this year. That sounds like she wants to get around 2%, maybe a little bit higher on the funds rate. And the Fed will have an opportunity to hike rates at every meeting this year. The committee's prepared to take stronger action if warranted, that is, if inflation does not come under control. She says she's watching the yield curve for signs of increased downside risks, and that the Russian invasion, along with the COVID lockdowns in China, create upside risks for additional inflation. At the same time, they create downside risks to growth. Finally, she says the U.S. economy has considerable momentum, so she seems to suggest it will not be all that painful, all this tightening she's planning. But very definitively, you know, Carl, she is the, I guess, still the nominee to be vice chair of the board. So she's becoming more important in what she says, clearly out there, telegraphing what we'll probably hear in the minutes tomorrow. And then again, the actions that will be taken at the May meeting, which seem to definitively now suggest the Fed will begin reducing the balance sheet next month.